Watch what countries build, not just what they announce. Because when a state quietly locks in long-term financing for real assets, it's not chasing headlines, it's laying foundations. In 2026, Ethiopia has secured 340 million US dollars to develop the Tulu Kapi gold project, a move that signals something much larger than a mining deal. This is about more than shiny metal. It's about foreign currency, state capacity, and economic repositioning. Ethiopia isn't gambling on gold, it's planning with it. This isn't a gold rush, it's a currency strategy. And remember, if you want more Africa First stories that Western media ignores, hit subscribe. We don't chase the headlines, we chase the truth. And by the end of this video, you'll understand why Ethiopia's gold strategy matters and what it tells us about Africa's next economic phase.
Our next story is from Ethiopia. It is one of Africa's biggest coffee producers, and now it is on its way to becoming the continent's new gold powerhouse. Ethiopia has secured $340 million to develop the Tulu Kapi gold project. It will be one of the country's largest modern gold mines. The Tulu Kapi mine is located around 360 kilometers west of the capital, Addis Ababa. It is expected to produce over 4,600 kilograms of gold annually during its first 7 years, and commercial production is set to begin by 2027. The mine would help Ethiopia enter the African gold industry as a serious player and not just a marginal gold producer. Once the operations begin, the gold mine is expected to become a major source of foreign exchange for Ethiopia. Ethiopia is investing in its mining industry at a crucial time. Its currency, the Birr, is facing serious losses. Last year, it was one of the world's weakest currencies and Africa's worst performing currency. The Birr fell more than 15% against the dollar in 2025. Back in July 2024, Ethiopia was granted a $3.4 billion International Monetary Fund extended credit facility. In exchange, it agreed to allow its currency to float freely, open up its financial sector to foreign investment, and make plans to privatize state-owned enterprises. That move marked the start of a sharp losing streak for Ethiopia's currency. After the government liberalized the foreign exchange market, the Birr was allowed to float freely.
So as we know, Ethiopia doesn't lack ambition. It's one of Africa's most populous states, with a long history and a modern economy shaped by infrastructure-led growth, railways, industrial parks, energy projects. But Ethiopia has faced a persistent constraint: foreign currency, imports outpaced exports, and debt servicing pressured reserves, right? Global shocks expose vulnerability. So the question Ethiopian policymakers are facing wasn't ideological, it was practical. How do you expand hard currency inflows without surrendering sovereignty? One answer was mining, but done deliberately, not recklessly. So development plans fail fast when the balance sheet can't breathe, right? So people are saying here that gold projects, Africa's digging holes again, another extractive deal, foreign companies cashing out. And that reaction is understandable. History trained it, right? So let's look at what's actually happening. The Tulu Kapi project is being financed through African lenders with long-term debt covering the majority of funding, complemented by equity investment, of course. And that structure matters. It means Ethiopia has avoided short-term speculative capital, locked in patient financing, and retained a carried government interest in the project. And the project is projected at 164,000 ounces of gold annually, with commercial output expected from 2027. So this isn't a pop-up mine, it's a planned revenue stream. And crucially, the Ethiopian state is not a spectator, it's a stakeholder. So Africa doesn't need less mining, it needs better control of it. And Ethiopia is treating mining as a macroeconomic infrastructure and not a side hustle. So gold here is not the end, it's the stabilizer. And this project changes the equation in several ways. First, the foreign exchange. So at full production, Tulu copy becomes a reliable source of hard currency, the kind that supports imports, stabilizes the currency, and reduces crisis-driven borrowing. So secondly, there's signaling, right? By securing financing largely from African sources, Ethiopia demonstrates that continental capital can fund continental assets. That challenges the old assumption that African extraction must be financed and controlled externally. Third, that's state learning, right? Mining forces governments to build regulatory capacity, contract management skills, and environmental oversight, revenue governance. Those capabilities or capital spill into other sectors. That isn't just gold money; it's institution building pressure. And they said Africa can't manage complexity, then complained when we learned, right? And notice that Ethiopia did not do, right? So it didn't frame this as charity, it did not brand it as rescue, it didn't apologize for extracting value. It treated it like mining is what it is, a tool, dangerous if misused and powerful if disciplined. So this gold project isn't Ethiopia's finish line, it's a test case. And if managed well, it opens doors to broader mineral development, diversifies export earnings, stronger negotiation power in global markets, but it also comes with risks, as we know. So gold can distort economies if it overwhelms everything else. It can invent rent sinking if transparency slips, and it can reproduce neo-colonial patterns if downstream value is ignored. The difference this time is intent. Ethiopia is openly positioning mining as one pillar, not the whole structure. And this builds on what we've covered in previous Africa Power reports because economic sovereignty isn't about avoiding resources, it's about governing them intelligently. So they say Africa should diversify, then they panic when we pick something profitable. So inshallah, in future episodes, we'll examine which African states are turning minerals into strategy and which are still selling them raw, right? So here's the truth without remorse. Ethiopia didn't discover gold yesterday. It decided to turn it into structure today. With patient capital, with state participation, with long-term thinking, that's not a rush. That's a pivot. So, mashallah, that's your African Insight for today. Please don't forget to like, comment, and subscribe because I'm Mr. Empower TV. We don't chase the headlines, we chase the truth behind them. This is Mr. Empower, and I'll see you in the next video. Peace.